Hi, what's going on? Today we're gonna be doing a little rundown on my strategy, which a lot of you have been asking me for. So I'm just gonna do a quick one. Essentially, my entry model is IFVGs. If you guys don't already know, I trade ICT and I use specifically Dodgy's DD's strategy. If you wanna check him out on YouTube, you can just type in Dodgy's DD, you'll find him. That's where I learned this strat from, but it's basically just multiple ICT concepts, and yeah, the entry model is just an inversion fair value gap, and pretty much it's not that complicated. Honestly, you don't even have to use inversion fair value gaps. I think that the most important part about your strategy is knowing when to take profits and how to move your stop loss and all that. So I'm going to run through that as well. So essentially, the three key confluences that I require are liquidity sweep, and then displacement and speed, and then inversion fair value gap, and then that's pretty much all I look for. It's very simple stuff. Displacement and speed is probably like one of the most important confluences to look for. If you don't know what displacement and speed is, basically, displacement, you can see it if you see like a giant, nice, non-wick candle, like such as this one right here, this bullish candle. If you see like a wicky, like this type of small body, large wick candles, that's not displacement. And then for speed, you only can see in real time when you see how fast that candle forms, how fast that candle moves up or down. That's speed. So liquidity sweep, you all know what liquidity sweep is. There's no liquidity sweep here. I guess this is a liquidity sweep. If you guys don't know what liquidity sweep is, it's when swing high or swing low is swept. So this is the swing low, this is the sweep, this is the recovery, and then yeah, and last but not least, inversion fair value gap is right here. So you have a bearish fair value gap that gets inverse. That means get closed above, and that will be your inverse, and that will be the entry, and the play worked out here. But I'm not trading now, it's London. All right, another confluence that I like to use are SMTs. Someone in the Discord was asking the other day what an SMT is, so I'm gonna try to find one for you right now. Okay, we have one right here. So if you look here so first you have to find two pairs that trade very similarly. So for me it's NQ and ES. This can also be like, if you're on Forex, it can be like pound USD and Euro USD. So it's essentially when one pair sweeps liquidity while the other one does not. So if you look here on NQ, this liquidity has been swept, but on ES it has not, and this can occur on any time frame. So I don't stick to one time frame. If I see an SMT on a 1 minute, I'll take that into account. If I see an SMT on a 15 minute, I'll take that into account. But obviously the basic higher time frame holds higher power. Obviously it comes into play. Depends on your own testing and how much you see it play out. So essentially I just grab a few confluences, but those are my favorite ones, and then if I see them play out, I'll enter a trade. As for how I take profits, most of the time I'll move my stop to break even. Alright, let's take this play for example. Most of the time I'll move stop to break even once it hits the first internal high. If the internal high is too far away, I'll move it at 10 points. But if the stop is small like this one, if the inverse is small like this one, I wouldn't mind like holding for a little bit longer before I move to stop to break even, because the risk is quite small. As for taking profits, it can be anywhere. It could be imbalances, it could be internal highs, and obviously your final take profits would be external highs. Favorite draw on liquidity would be equal highs or data highs. Equal highs are essentially like 2 points on the chart which are at the exact same price level. Data highs will be, let's say, CPI, large news wicks that appear. I don't see it, like maybe these ones here, this one, which are very common to get hit as well. So those are my main take profits. as for my stop loss, how does my stop loss work? Basically, if we inverse this fair value gap, that's my entry, but if we re-inverse that, like if we close below that again, I'll be out there. So technically my stop loss is not that fixed all the time, so it kind of requires a bit of like guesstimation where you want to put your stop loss. I'll always have a hard stop loss, maybe like a few points beneath the actual close, just in case like a wick comes down but the body doesn't close through this inverse. It will look something like that, maybe. Sorry, on the close will be here. So yeah, my hard stop loss will probably be here. This totally up to you guys, how much do you want to risk. You can even put it at the low if you want, but I follow quite closely how Dodgy does it. Just that I move my stop to break even a bit. I mean, after months and months of trading this strat, I kind of developed my own way of moving my stop. One more thing about taking profits, I don't scale half or like scale at points. I just trail my stop because I don't like to reduce my position for combines, but for eventually when I get on an XFA or like on a live account, I'll obviously take partials, but that's not very common because when you reach XFA stage you have to scale up to be able to trade more contracts. So yeah, so if I were to only trade 2 contracts, let's say when I pass this account, I will not be taking partials. I'll just be taking like a hard maybe $200 profit, and then yeah, most of the time it'll be 10 points, but if I use less contracts, $200 or at a very, very strong drawn liquidity. So yeah, that's about it for my strat. ICT, just choose a couple of confluences, choose an entry model, be it IFVGs or like the 2017 model where you have a retrace into an FVG. All of this works. You can even add that retracement with the IFVG, or you can add like a unicorn model, whatever it is. The more confluences, the better. And then after that, it all comes down to knowing when to take profits, knowing when to move your stop to break even, moving your stop up, trailing, and yeah, just risking the correct size. That's important as well. So that's about it for my strategy video. If there's any questions, just drop them in the comments and then I'll try my best to answer all of them. Yeah, just a quick video today. No trades taken, probably won't be trading tonight, so yeah, I'll see you guys probably next week with a trade recap. All right.